Good morning, good morning, good morning, everyone. Back for another first call. Let's get it.
Open heart surgery, dying 3 times on the operating table, CT. What motivates you? Your story motivates me. Your story motivates me. The stories of extreme will. People that came through something or circumstances that they were not supposed to go through. They just ain't supposed to be able to do it. But they did it any goddamn way. It's impossible. I've heard that so many times. It's just impossible. Can't be done. Or Will Wright. I know they had to hear that. Fly? Y'all crazy. Supposed to fly, we had wings. Roger Bannister, first man to break 4 minutes mile. I'm sure they told him it couldn't be done. They would say it couldn't be done. Yeah, no way. He run a mile in 4 minutes. Roger said, fuck y'all. It is impossible until some crazy son of a bitch has the audacity to believe that no matter what the expert or the doctor says, I can still do this shit. Anytime that you give your best effort, that you give everything that you possibly can give, there is satisfaction in knowing that I did my absolute best. I did all I could do. Will is the key. Will. Remember what you are. Remember what you are. That's my mission, to be able to teach people that kind of will and desire. How do you teach that? How do you teach people to not look at something and say immediately, because the appearance, I can't do it, I give up, before they even attempt it?
Good morning, good morning, good morning, good morning. What is up, everyone? How you guys doing? My boy CT Fletcher, always dropped in the game, always dropping the gems on us. And it's just super important that I wanted to share that this morning, is because we have to remember what we are. We have to remember who we are. We have to remember why we're doing the things that we're doing. We have to remember why we're even on this call this morning. We have to remember why we woke up this morning to get after it, right? And it's important that we understand that, because when we've been reading this book, The Psychology of Money, this whole book comes down to just who are you? It just comes down to who are you? And what is it that you're trying to do? What are you trying to accomplish when it comes down to money? What is your mindset right now? And what does it need to change? What does it need to become in order to reach the levels that you're trying to reach? But if you don't know who you are, if you don't know where you're trying to get to, I promise you, it's going to be very hard for you to continue to elevate. It's going to be very hard for you to get to the finish line. I appreciate you guys for tapping in every morning to First Call. We are here on YouTube Live, 6 a.m. every Friday morning, where we are sharing wins and victories and things that we're just overcoming and achieving. So if you do have a win, feel free to share it. Give me 1 second. Let me bring the link up here for you guys, so this way we can get in here. And I appreciate. Good morning, Nick. I see you. Good morning, Faith. Good to see you. I appreciate y'all tapping in. Feel free to like the video, so this way we can just get that that algorithm boosted a little bit. And then let me put this post right here. Feel free to share. We're gonna get some more people in this room. I have been working on my team really intentionally. We've been doing interviews. We're going to get a few more people on my squad to help out with marketing, to help out with posting, so this way we can start filling up this room. My goal at the end of this year is to get over 100 people in a First Call on YouTube Live, right? I know it sounds a little ambitious when we're averaging about 15 people. I think the most I've ever seen here is about 20, 25. But guess what? This is where we're going to get started. This is how we get the journey going. My big win of the week is really, this was a week of consistency for me, right? It was one of those things where I've been trying to, have my daily planner here. You guys know I shared this with you guys here on First Call. If you need a copy of this, I can send you the download link. I've been wanting to fill this out every single day. Really just write down all the tasks that I need to accomplish, and then also fill it inside my time schedule based off of the appointments I have, based off of the work that I have to get done, and I just want to get everything finished. And for me this week, I've been really consistent in just keeping momentum going. I'm right now listening to the book. I like to read one book at a time, listen to a book at a time. So while we're reading The Psychology of Money, I'm right now listening to the book If You're Not First, You're Last by Grant Cardone. And he's talking about in that book, in one of the chapters I'm currently listening to, is that you will reach success and you will get so much closer to your goal if you are intentional with your time and your actions and progress towards working on whatever it is that you're working on. Like, don't let a day go by where you just throw it to the side and say, okay, like, I'll do it tomorrow. He's like, even if you just touch it, even if you just plan it, even if you just start trying to chip away on it, just start making that progress, and you will see how your mind and your brain will start building that momentum. You'll start feeling better. You'll start sitting at that desk for longer periods of time. You'll start figuring out that you can do more than you thought that you could. So that for me was my goal this week. It's like, no, but you have so much you have to do. How are you going to get it all done? This right here. Just mapping out my tasks. And even if I don't get it all done, it's okay. It's about getting the process started. It's about moving. It's about getting the journey going, right? So that was really my big win for this week. So I just kind of wanted to share that. And again, if you guys have any wins to share, we do have the link posted at the bottom or inside the comment section. So that way you guys can just copy and paste that, hop into the green screen. I can pull you up real quick. You don't have to have your camera on. Feel free to share a win like we do every single Friday. We've been reading the book, The Psychology of Money. And I've been testing out how the book readings have been going, in the sense of just like with the numbers, if people have been enjoying it, if they've been liking it. Or what I've been finding is I feel like people start off the books really strong and then they fall off because they might fall behind in chapters. So they start not showing up to the calls as much because maybe they're behind. I don't know, right? Maybe I have to market it better. I'm not sure. But this book right here, even if you're not keeping up with us in terms of chapter by chapter, right now we're going to go over chapters 15 and 16. It's okay. Because one, get the book and just read it on your own time. Two, listen to the audiobook in your own time. Three, just go on YouTube and get the summary notes on your own time. Or four, tap into First Call where you're getting the summarized version, of 2 chapters, 3 chapters at a time. And now it's as though you read the book. You're getting the tips, you're getting the principles, and then now you can read it a little bit more in depth to get more context, to get more clarity, to start, just getting some more information, right? And one thing that I love about this chapter, chapters 15 and 16 of this book, to me are the most important chapters of the book. From what I remember the first time when I read this book, I highlighted this entire chapter through and through. Now, I believe that the things that we've learned from chapters 1 through 14 have been very important as well. I believe that they're educational, beneficial. We have to, like, it was priming us for what we're learning in chapters 15 and 16. They were getting us prepared. They were getting our psychology to that point where they could drop these bombs on us and we could be able to take them, right? On Wednesday, we spoke about in chapters 13 and 14 that you have to understand that whenever you're devising your game plan, whenever you're putting together your investing strategy, it's important that we include room for error in there. It's not that we are giving into fear. It's not that we are fearful. It's not that we don't think the things that we're going to accomplish or the things that we're looking to achieve is not possible. But it's important that we don't just look at the upside, that we just don't look at the sunny days, or we don't look at this investment that can generate us passive income at 25% a month, or we look at this investment that can make me 100% on my trade. Like, it's important, while it's beautiful to look at what we can make, that we also allocate some time, some energy, some resources, and some planning for some room of error, for things going not the way that we expected it to, right? The best plan is to always plan for things not going according to plan. That's what Morgan Housel said. So in chapter 13, that's the main premise of that chapter, is we got to start planning for contingencies. We have to start planning for things. What happens if it does go wrong? That's not to stop us from investing. That's not for stopping us from taking that step forward, but it's also to make sure that we have certain things in alignment, so this way we don't completely wipe ourselves out, because starting at 0 is a lot harder than starting at 1 or starting at 2. It's okay to fall back. It's okay to take risks and not reach the target goal, but it's not okay for us to completely get wiped out. So now we have to start the process all over again, right? And then in chapter 14, he talks about how our future selves, the goals that we want, are going to change over time, and be unapologetic about that and be okay about that. Understand that the person that you are today is not the same faith that you were a month ago, or same faith a year or 5 years ago. Understand the same Nick that's on this call right now is not the same Nick from 5 years ago, 2 years ago. As you progress through life, the goals that you want, the things that you want out of life are going to change. And that is perfectly okay. And truthfully, as you're elevating your mindset, as you're elevating yourself, you're elevating your income, as you're becoming a better person, as you're doing more, accomplishing more, some of the things that you used to want, you probably are not going to want anymore. And it's probably for the best, in all honesty, right? A lot of people who will say to you, now that you have some money, or now that you've accomplished certain things, maybe you have a few letters behind your name or in front of your name, right? You'll probably be like, well, you changed. You're not the same person anymore. Yeah, well, the things that I want out of life has changed. The circles that I'm running in have changed. The type of money that I'm making has changed. Of course I've changed, right? And it's okay to change. And it's important that we analyze ourselves in this evolving process, that as we're changing, that we got to understand that, you know what? The goals that we wanted yesterday, it's all right to change them today, but are they the goals that we want now are elevated goals from what we wanted in the past? I hope that makes sense. Because a lot of people, what they'll do is they'll say the person I am now is different than the person that I am then, but the person that they are now has now accepted complacency. The person that they are now has accepted their current situation. The person that they are now are cool with dwelling and in their past, or dwelling in their stew. And the reason why I say the stew is because they feel like, there's no way out, or they're fine with sitting in their own misery instead of trying to figure out a way out. So that's the difference between the you'll change. It's okay to change, right? But make sure that the change that you're looking and seeking is elevated change. It's enlightened change. It's more accomplished. There's more achievements. It's doing more. It's getting more out of life, right? And when you understand that you're going to change, then you're going to understand chapter 15. And chapter 15 makes you understand that there's a price to change. Chapter 15 makes us understand that nothing in this world is free. My mom always used to tell me that growing up, like, nothing in this world is free. Even if they tell you it's free. Even when you go to Verizon and they like, oh, we're going to give you this free with the phone, you paid for the phone. And they just sunk it into the cost, right? Or even on Black Friday when they do a BOGO, a buy one, get one. Or at Publix when you're doing the buy one, get one, right? Nothing in life is free. They know that once you get those 2 items in your cart, you're paying for one, you're getting the other one for free. Most likely you're going to see something at the cash register that you need to throw on there as well. That's going to now, or something that has to accompany. You ever realize that at Publix when they do the BOGOs, like they never give you the BOGO of something that will stand alone? Like it's never, oh, I'm going to give you like bread. It's like I give you the jelly that you know you need to be able to buy the bread with to actually make the jelly useful. Y'all ever realize that? Like they'll give you like the tuna, buy one get one free, but they're not giving you the crackers or the chips and that's how it works, right? And we have to look at life and our investing goals very similarly. Everything has a price. And the key to a lot of things with money is figuring out what the price is and be willing to pay it. That's what CT Fletcher was talking about in the video that I played earlier. What is the price? Remember what you are. Remember who you are. What is the price that you're willing to pay in order to get to the future that you want to accomplish and achieve? And it's funny that we talk about this because we never typically talk about this when it comes to money. We talk about it when it comes to personal development. We talk about it when it comes to mindset. We talk about it when it comes down to fitness goals, right? Which we talk about it a lot of times when it comes down to degrees and accreditations. Like, what's the price? Oh, I got to stay up late hours. I got to study. I got to take this test. I got to get a score on this test, and then I'll be certified. And then, boom, I'll be able to make more money. Excuse me. Or I want to lose weight. The price is I got to wake up. I got to go to the gym. I got to put in an hour a day. I got to eat right. I got to eat lean. I got to burn my calories. I got to run a mile. That's the price. But a lot of times when people are talking about investing, when they're talking about making money, they are not talking about the price. And the problem is that the price of a lot of things is not obvious until you've experienced them firsthand when the bill is overdue. That's the problem. So many people, they will talk about options trading. They will talk about the $1,000 days, the $10,000 trades, the 100% increases on your account. They'll talk about all that. But they don't talk about the price of theta. They're not talking about the price of an expiration of a contract expiring worthless. They're not talking about the price of premiums on a super volatile stock or the implied volatility of a stock. They're not talking about that. They're talking about the returns. They're talking about the money you can make. It's not until you actually start investing in the stock market and you start investing in options trading that you realize that there's a price to the returns. Now, you're probably saying, well, no, but isn't that counterintuitive? Isn't that, assumed? Isn't that, something that everybody should know that there's a price to everything? There is. But in all honesty, most people don't think that way. And if we did think that there's a price to things, then we would be a whole lot less entitled of a nation, a whole lot entitled as individuals, and we would understand that the things that we want to accomplish is going to require a price. And I love the way that Morgan Housel makes the example here when he ties it to the stock market, because we have to understand that there's a price to admission to being able to participate in this stock market, which is one of the biggest money makers of all time, right? Think about this. Most things are harder in practice than they are in theory. So you hear about Warren Buffett, long-term investor, billions of dollars, started off with $50, $100, and now worth billions because of long-term value investing, buying low, selling high, buying the dips, bottom fishing, buying undervalued companies and holding them for a really long time. It makes so much sense. Sounds so simple. But most things are harder in practice than they are in theory. Just like options trading. Just sell the contract before expiration. Just, don't buy closer in the money or at the money. Just don't buy a company that's the premiums are super high or the implied volatility is through the roof. Sounds good. But things are harder in practice than they are in theory. And this is often because we are not good at identifying what the price of success is, which prevents us from being able to pay it. Understand that the goals that you want to accomplish and achieve, it doesn't matter what it is, inside the stock market, outside of the stock market, inside of your financial journey, outside of your financial journey, there is a price to pay. And many of us underestimate the price that it requires for us to have the success that we want. You married that girl, you married that man, you thought they looked good, you thought they had a great personality, they make you laugh, they provide for you, they do the things that you want to do, but you forgot the price that it costs to have a very successful relationship week after week, day after day, year after year. Good morning, Khadijah. Great to see you. I'm so funny you mentioned you hopped in here because I literally was going to text you today because I was like, I got to tap in my girl, Khadijah. I hope she's okay. I haven't seen her in a while. Great to see you, Khadijah. Great to see you. Right? Many of us, we want to have a better physique. We want to be healthier. We might want to run faster, look better in the mirror. We might want to have more energy levels, but we often underestimate the price that it's going to require for you to reach your goals. If you've never worked out a day in your life, it's going to be a little bit difficult. If you have knee pain or back pain or ankle pain or some type of nagging injury, it's going to be a little bit difficult, right? But there's a price to pay for the success that we want to reach. And the thing about it is, we are good at identifying what the opportunity is. We're good at pointing out the thing that we want. We're good at saying, oh, I need this. I want this. But we often underestimate the price that it's going to cost us to get there. And the beautiful thing that I love about the stock market is because there's a price to pay for the long-term gains. The S&P 500 increased 119-fold in the last 50 years if we're going back to 2018. If we go to now, it's even higher because this does not include COVID numbers. And this also doesn't include, we had a bear market last year, but we've been doing well this year so far, right? So let's just say 125-fold. The S&P 500 has increased 125-fold in the past 50 years. All you had to do was sit back and let your money compound. But guess what? That's a little bit harder than it seems. It's easier in theory than it is in practice. The price of successful investing is volatility, fear, doubt, uncertainty, regret. These are all the things that go into successful investing. But we don't talk about these things. But we have to understand that if we want the returns that the stock market's going to give us, we're going to have to deal with the volatility. We're going to have to deal with the up and downs. We're going to have to deal with the fear, which is the recessionary markets, which is the bear markets, which is when everything is red. We're going to have to deal with the doubt. When you're on CNBC and you're hearing James Cramer say that this company is going to zero or to sell, or when you hear a CEO come out and mention some things that aren't aligned with the company and it's now bottoming and it's now tanking, you're going to have to deal with uncertainty. You're going to have to deal with some regret where you're like, did I buy this company at the wrong time? Was it overvalued? Like, what's going on? But I love the example that he gives here, right? Because he talks about a few companies in particular. Netflix, for an example. This stock has returned more than 35,000% from 2002 to 2018. That's the example he gives here. It's even higher if you include 2022 numbers. Why? Because of the boost that they had during the COVID. The stock returned more than 35,000% in a 15-20 year period. But during that time, the stock traded below its previous all-time highs 94% of the time. Let's talk about let's talk about Monster Energy, right? For an example, Monster Energy returned over 320%. Do you see what type of returns we're talking about long term? 320%, 320,000%, right? From 1995 to 2018. So that's just about 20, 30 years. One of the highest returns in stock market history. But the stock traded below its previous high 95% of the time. Fear, uncertainty, doubt, regret. It's easier in theory than it is in practice because it's hard, guys. When you're wanting to see your investments go up, it's hard when you want to make money. But guess what? you're seeing bear markets like we saw last year. It's hard when you're watching the news and you see all the people talking about recession. It's hard when you see people getting laid off from their jobs, and the economy is going down, and the inflation is going up, and the price of eggs is what the cost of of a meal used to be. Like, eggs alone right now are what you're gonna pay for a meal. It's hard. But the inability to recognize that investing has a price can tempt us to try to get something for nothing. And that's my problem with the modern day investing. That's my problem with modern day finances, because we all want the glitz. We all want the glamour. We all want the money. We all want the wealth. We want the cars. We want the bags. We want the jewelry. We want the returns. We want it all. But we have failed to recognize that investing has a price, and it tempts us to try to get something for nothing. Understand this. The bear markets, that's the price of admission for the stock market. The recessions, that's the price of admissions to a great economy. Understand that unemployment is the price of admission for great paying jobs. Understand that the red days are the price of admission for the long-term green days. It's what the price that you're paying. It's the fee. But the thing is, many of us, we will look at cars, we will look at bags, we'll look at jewelry, we'll look at all these other assets, and we have no problem paying the price. We have no problem paying the price. Why? Because we see the immediate return. We see the instant gratification. I was talking to somebody on the phone yesterday, and I told them I would much rather spend $5,000, $2,000, $1,000 on a mastermind, on a 2-day conference, on a mentorship than I would a vacation. It's night and day. I would rather spend money on a mastermind or mentorship than going to another country. It's just why. Why would I do that? Because I understand the price that I'm paying for the mentorship is education, it's knowledge, it's learning that is now going to be able to make me more. It's going to make me be more. The price is not going to be that instant gratification. I'm not going to get the payoff right away, but the payoff is going to come in the future. But many of us, we want the payoff now. We want the gratification now. We want that instant feeling. We want that happiness. We want that thing now. So we'll spend money on the cars. We'll spend money on the vacations. We'll spend money on upgrading different things, and or whatever the case may be. It might be our looks. It might be, where we live. It might be the things the clothes that we're wearing. It might be, the things that we're into. We will upgrade everything else, but we're not going to upgrade our investing strategy. We're not going to upgrade our plan. We're not going to upgrade the amount of money we're contributing to our investment accounts. Why is that? Why is that? Why do so many people who are willing to pay the price of cars, houses, food, vacations try so hard to avoid paying the price of good investment returns? The answer is the price of investing success is not immediately obvious. When the bill comes due, it doesn't feel like a fee. It feels like a fine for doing something wrong. And that is why now you have to change your mindset, because it's not a fine. It's a fee. It's just a fee for admission. And you pay fees every single day. That car that you're driving, the gas that goes into it is a fee. Probably some of you guys work at office buildings where they have to allow you to pay for parking. That's a fee to protect your car. That's a fee. There's for your 401k, your W-2 that you're getting every week, every bi-weekly, that money that's getting pulled out, that's going to your retirement and your taxes, it's a fee. You bought the house. Why are you paying property taxes on it? It's a fee. There's a fee to everything. But why is it when it comes down to the fee for investing, we just let it go over our heads? We no longer want to pay it. It's a little bit too expensive. I can do it tomorrow. We can do it next month. We'll do it next year. I'm getting there. I'm on my journey, Noble. It's a process. I'm getting there. Like, why? We're willing to spend it everywhere else. So you have to reframe your mindset to start thinking of a market volatility as a fee rather than a fine. It's an important part of developing that mindset that lets you stick around long enough for the investment gains to actually work in your favor. When I'm doing sales calls with my individuals and I'm selling them high ticket programs, right, or I'm selling them any type of program, I tell them the vernacular that I use when I'm on the phone. I said the investment for the program is only 13K, 5K, 10K, 25K. But I use the word investment very strategically because you'll be on the call and people will be like, all right, I see, I get the mentorship, Noble, like what's the cost? What does it cost? And I'm like, it's not a cost. It's an investment. You see, you have to change your mindset. You're already looking at this mentorship program as a cost. You're already looking at it as a fine. You're looking at it as something that is already taking money from you. That's what a cost is. A cost is something that we associate with not getting a return on. It's I give forth money and I don't really get anything worth of value back in return, or it's taking money from me and yeah, I can get something, but it's not typically, it's a negative connotation. But when you start thinking instead of expenses and you start thinking in investing, that's what I do. I challenge the people I'm on the call with. When they say, Noble, what's the cost? I'm like, is this a cost or is this an investment? Like you tell me, like, is this a fee or is this an investment? Like, you're investing in mentorship that's going to help you be able to get a real estate property in the next 30 to 60 days on top of business funding. Is that a cost or is that an investment? Learning how to do sales and marketing and grow your business so now you can walk away from your 9 to 5, is that a cost or is that an investment? Learning how to navigate the stock market so this way you have long-term gains appreciate over time, is that a cost or is that an investment? We have to change our mindset. Most of us are looking at things as costs. We're looking at them as fines, and therefore we already have a negative connotation before we even start investing. I know people right now who have stocks in Robinhood, TD Ameritrade, Webull, whatever the case they have it, but they look at that as a fine. They look at it as a cost. They're nervous. They hit me up, Noble, is this stock gonna go up, Noble? I've been owning it for like 3 months. Like, what's it gonna do, Noble? Bro, it's an investment. It's not a cost. You're not losing anything here. You're gaining. You might be losing price valuation on the stock because it's going down right now, but you gained a share. You've gained an asset. You have to change the way you think. And I'm sorry I'm missing the comments here. I always look forward to this. Great. Appreciate you, Benny. Nick. Appreciate you, Benny. Appreciate you, Benny, right? The 2023 is the year of upgrading the financial education. I love that you said that. And the point around that is now we're changing the mindset because we have to start thinking at things differently. It's no longer a cost. It's no longer a fee. It's an investment. It's an investment. And understand that everything worthwhile, everything that's worth having, there's a price of admission. Your degree that you have was a price for admission. You paid to get into that class. You paid for the accreditation. You paid for whatever certification. You paid for it. So why don't you think of it any differently over here? The bear markets, the red days, the bubbles that burst, those are just all fees. And those are prices of admission, so now you can get started. But chapter 16 is where we take this to another level. Because now when you understand in chapter 14 that you're going to have to change, that the goals that you wanted yesterday is different from the goals that you want today. You're going to have to change. But in order for you to change, you have to understand there's a cost to change. So for you to get to where you're trying to be, understand that it's not going to be free, that there's going to be work that has to be put in, that there's going to be a cost, there's going to be an investment that's required out of you, time, energy, and money. But then once you understand that there's going to be an investment, this chapter 16 is where he hits you so hard, right? He says, you and me. And I love what he says in this chapter, right? Beware of taking financial cues from people playing a different game than you are. So, chapter 14, you're going to change. You know that. Chapter 15, there's a price for that change. Chapter 16, the price that you're going to pay is determined by the game that you're playing. We're all playing a different game. Khadijah's goals are not my goals. Benny's goals are not my goals. Nick's goals are not my goals. My mother's goals are not my goals. My sister's goals are not my goals. So you have to be very weary of taking financial advice from people who are playing a different game than you are. And I've talked about this on First Call in the past. You and I were both stock market investors. Khadijah's in the stock market. I'm in the stock market. Benny's in the stock market. We all are in the stock market, probably majority of us here. Some form or some fashion, we all in the stock market. There's somebody here who's a beginner. They haven't invested anything. They might not have their brokerage account yet, but their involvement in the stock market is through their retirement, through their 401k. They've got a mutual fund. They've got a money manager managing the money for them. That is their involvement. That is the game that they're playing. Somebody else, Khadijah, she is an options trader. She does short-term trades, some scalps. Maybe she has some long-term trades as well. So because of that, her time horizon's completely different. She looks at the markets a little different. She's still in the stock market, just like that beginner who has a 401k is. But guess what? Her strategy's different because her game plan is different. Me, I do more long-term investing, buying of shares, holding for a little bit longer, dollar cost averaging. I do options trading, but it's not really my thing that I like to do that much. Guess what? My game is different. 3 different examples, one market, completely different game, completely different strategies. So you have to understand that when you're taking financial advice, not just from me, and this in all these sessions, these are not just financial advice. This is just me giving some game. So I just wanted to put that out there. That's your disclaimer for the day, right? Doesn't matter if you're listening to me, Seven, YouTube, Instagram, Grant Cardone, doesn't matter. Everybody's game is different, and you have to find individuals who are in alignment with the game that you are trying to play. I hope this is it's most fundamental. An iron rule of finance is that money chases returns to the greatest extent that it can, right? Short-term traders, they're going to ignore the rules governing long-term investing, particularly around valuation. Why? Because those rules are irrelevant to the game they're playing. Short-term traders are going to ignore some of the rules that me as a long-term trader, investor, have to worry about. I talk about fundamental analysis all the time. I talk about valuations all the time. I talk about financial statement analysis all the time. Somebody who's a short-term options trader, I'm talking about day trading, scalping, weeklies. You don't need to do that work. You don't need to do fundamental analysis. You really don't to be successful. It's a completely different set of rules. Same market, different set of rules, right? Bubbles, we see real estate bubbles, stock market bubble. We see these bubbles, right? They do their damage when long-term investors playing one game start taking their cues from short-term traders or short-term investors playing another game. That's what happened in the 2000 housing bubble, okay? You had people buying homes at ridiculous valuations, $300,000, $400,000 over asking, $700,000, right? But guess what? The person who's trying to raise a family with 2 kids does not make sense for somebody who's trying to buy a home for $200,000 that they're trying to flip in the next 30 days or 60 days for a $50,000 or $100,000 increase. It's a completely different game. One person is buying that asset to hold, to live in, to be able to appreciate in value over time, to give to their children, whatever. The other person is there just to invest, to make a quick flip. Same marketplace, completely different game. And it's hard for many of us to understand and grasp that other investors have different goals than we do. And that's why the call to action for today, and that's why I played the video at the beginning of this session of C.T. Fletcher when he said, remember what you are. It's to remember what you are, who you are, and where you are going and how you are going to get there. I'll say that again. Remember what you are, who you are, where you're trying to go, and how you're trying to get there. Because we can all be in the same marketplace and be playing a completely different game. And because we're playing a completely different game, the rules are different for you and I. And you know that. We were all raised that. If you're a minority in this country and you were raised as a young black person, it's primarily your mama or dad told you at an early age that the rules of the game are completely different for you. So therefore, you can't take some certain risks that some other people can risk. You know that. Take that same mindset and apply it to the stock market. Apply it to the real estate market. Apply it to your business. Some people, Grant Cardone can say certain things like making $400,000 as a man is not, is inferior. You're failing as a man. He can say that because he's at a different point in his game than we are right now. Simple as that. And guess what? That for the circles that he runs in, for the games that he's playing, for the rules that he's abiding by, $400,000 a year is a joke for them. You have to understand that. For some of us, it's not to make us feel bad. It's not to belittle us. It's not to put us down. It's just to understand that they're playing by a different set of rules because they're playing a different game. So for each and every one of us, we have to anchor our psychology and not realizing that rational people can see the world through a different lens, but then also understand that the world that we're seeing the lens that we're seeing the world through is our own. And we have to now start making plays in alignment with where we are trying to go. I hope this makes sense. My mom, she's not an entrepreneur, has no desire to be an entrepreneur. She's helped me out with my business, but she has no desire to be an entrepreneur. So that's okay. Her rules are different than my rules. So, and because of that, you can get lessons from individuals who are playing a different game than you are. For an example, my parents, they might not have taught me how to run a business. They might not have taught me how to grow wealth and make stupid amounts of money. But what they did teach me is how to be financially free from a standpoint of debt. They did teach me how not to be over leveraged, the borrower servant to the lender. They did teach me how to own assets like a home and land that you don't have to pay for, that you pay off, that you don't have to owe anybody money to. There's value in that. But guess what? It's a different game than I'm playing. And it's important that we understand this because so many of us, we're not reaching the goals that we want to reach is because we're not in alignment with not only just ourselves, but with the people that we're surrounding ourselves with who have similar goals, mindsets, and objectives that we do. There's a reason why I stopped working out at Planet Fitness. It's because their goals are different than my goals. Any gym that's giving you out pizza on the first of the month, their goals are different than my goals. No offense to people who work out at Planet Fitness. It's just that is not in alignment with where I'm trying to get to. I want to look at people who are bigger than me, that are more athletic than me, that are chiseled, more defined than me, that are faster than me, that are lifting heavier than me, because that is the goal that I'm trying to accomplish and reach. So I have to get in the environment around people who are doing those things. So is your environment in alignment with where you're trying to go? Simple question. Because there are a lot of people who are like, oh, I want to be options trader, but they're in no options trading groups. All you're in is just watching YouTube. That's gonna feed you, but that's not gonna grow you. That's gonna allow you to plant some seeds, but that's not gonna water you. What's gonna water you is the environment. Tapping in with individuals who have similar goals as you do. And that's why not every coach and mentor do you have to work with. Why? Because some of them are not in alignment with where you're trying to go to. Their goals are different. The timeline is different. The time frame is different. And I'm going to put this caveat in there as well. When you are courting people, dating people, relationship with people, trying to get more friends, a husband, a wife, a spouse, whatever the case may be, make sure that the goals that they have are in alignment with the goals that you have, especially financially. Because it's going to be very hard to make things work when one person has an objective over here and somebody has a completely different objective. Somebody who wants to build wealth and somebody who can care less about building wealth but more about spending the wealth, I promise you those two things are going to bash heads. They're going to bash heads. Like I have friends that we don't hang out with anymore as much. Why? Because I'm about building wealth. They're about spending money. And there's nothing wrong with it. When I want to hit them up to go on a trip or do certain things or, that's the role that they play. But I can't work with them every single day, every single hour. I can't be around them all the time. Why? Because the alignment isn't there. So you have to beware of taking financial clues from people who are playing a different game than you are. It's as simple as that. We're all playing different games. Because your goals are differently than my goals. But guess what? Housel, he gives this recommendation. Go out of your way to identify what investing game you are playing. And I love that Housel tells us what his game is. I'm a passive investor. This is what Housel says, his investment philosophy. I'm a passive investor, optimistic in the world's ability to generate real economic growth, and I'm confident that over the next 30 years, that growth will occur to my investments. That's it. That's his strategy. What's my strategy? I believe in the economic prosperity of this country and of the stock market and of other markets such as real estate. I believe in entrepreneurship, and I believe that you should be working towards out earning what your current salary is or whatever you're making. You should have your base income, which is there, but you should be taking a portion of that to invest. So this way you can create more income for yourself, and then having other revenue streams, which will now allow you to have more flexibility over the type of money that you're making, which will now allow you to have more time, freedom. Simple. That's my investing strategy. Did I say the stock market is the way to do that? No. Did I say real estate is the way to do that? No. I just said have income that you're putting into another revenue source that now has the ability to create you more income. And on top of that, so that now it's growing, and now you're not depending on one person to give you money, but you have multiple revenue streams or another business or something that you are in control of making you money. And therefore, from there, you can start experiencing freedom, both of your time and your finances. We have to understand this. Few things matter more than money than understanding your own time horizon and not being persuaded by the actions and the behaviors of people playing a different game than you are. Your time horizon is important. Your risk threshold is important. Your risk tolerance is important. Where you're starting at is important. The access to information and resources that you currently have is important. But none of those things should deter you and stop you from reaching the goals. They should not. It's you versus you. It's you and me. I can give you advice. I can learn from you, Benny. I can learn from you, Khadijah. I can learn from you, Nick. I can learn from you, Faith. I can learn from you just like you can learn from me. I can implement things from you just like you can implement things from me. But tailor it towards your strategy. Tailor it towards your plan. And if you don't have a clear and cut, identified investing strategy, I promise you, days are going to go by, weeks are going to go by, months are going to go by, and you're just going to keep having FOMO. You're just going to keep seeing opportunities pass over. You're just going to see other people doing things that you could have been doing. You're going to see potential that you had being used by somebody else. And we don't want that, man. We're tired of that. 2023 is not the year for that. 2023 is the year for us to step into abundance, but it's an abundance in a way that's in alignment with where we're trying to go. Be abundant in alignment. Get the alignment first. And I'm doing this in all across the boards. It doesn't matter what it is. Profit Rocket Club, my business, my groups, my people that I'm talking to, my mentorships that I'm in. It's all about alignment. It's all about alignment. And some things that you're doing now, some people are not going to be able to see. They're not going to be able to recognize. They might call you names. They might say certain things. They might tell you that you're crazy. They might say, all right, bro, we're just going to watch what you do and we're going to do what we do. That's fine. Not a problem. It's okay. Because you know why you're doing what you're doing. You know what your strategy and your plan is. And you know how it's going to help you reach the bigger goal. And that's the most beautiful part. Every single play that I've made in the last COVID, from 2018, that's when I graduated college, to 2023, 5 years, has been about just vertical elevation, alignment. Even at times, people being like, why'd you do this? Why'd you do that? It's okay. It's okay. You know what you're going to do. There are going to be bumps in the road. There are going to be pivots. There are going to be detours. But that's fine. Get in alignment. Get in the alignment with where you're trying to go financially. Start leaning into the environments and the people that will allow you to now start cultivating these things. What's that missing thing that you need? So this way you can continue to grow, grow, grow. take things to that next level. That's it for me this morning, my friends. I appreciate you guys for tapping in. As always, the first call every Monday, Wednesday, Friday at 6 a.m. We are finishing up this book really quickly. We only have a few more chapters. I'm trying to look here to see how many chapters. I think that there's 20 chapters. So we're finishing this book next week. We're reading chapters 17 and 18 for Monday, and then 19 and 20 for Tuesday, and we're going to be done with this book, and we're going to finish our first book of the year. I appreciate y'all for tapping in every single Monday, Wednesday, Friday, especially this morning. Good to see you, Benny. Good to see you, Khadijah. Good to see you, Nick. Good to see you, Faith. And I appreciate each and every one of you all for your support, your consistency, and let's get in alignment today. Let's only get financial clues. Let's only get financial advice. Let's only get in alignment with people who are trying to get to the same places that we're trying to get to. I'll see you guys at 8:30 this morning on Twitter Spaces for Mindset Fridays, and I look forward to continuing to elevate, continue to grow. Let's get to it this weekend. Let's make that money. And chapter 17 and 18 we'll discuss on Monday on Twitter Spaces at 6 a.m. I'll see y'all. Let's get to it, and let's be better. Later.